moving it. And of course, you can start putting in good funds and of course topping up your account so that you can trade this particular instrument. Okay. So guys, I will share my screen right now so that we can start analyzing across the agro community of instruments like the corn, the coffee, the wheat as the time will permit us, okay? So guys, don't forget, we are also streaming this particular session live on YouTube, okay? So it means any of this you miss, right? I pray you don't miss. But any of this you miss, if you miss any of the analysis, you can get back to YouTube. And of course, Rally Trade on YouTube, you'll see it there, so that you can equally watch it again and again. No, this kind of analysis is powered by repetition, okay? Education is powered by repetition. The more you hear, the more it will sink in, okay? So what really drives agro commodity is actually knowing when these instruments are being, knowing when they are in season, knowing when they are out of season, okay? Knowing when we are in wet season, dry season. For example, now we are in dry season now in most parts of the world. So you would expect the demand to be high and of course the supply to be a bit low. And of course that will equally drive the price to the upside. So let me share my screen right now. Then let's start from the first instrument we have to analyze. So guys, I've been able to share my screen right now. So guys, I've been able to share my screen right now. So from what you can see right here, um, you want to do what we call market structure analysis on this instrument, right? So even though big players all over the world participating on the agricultural produce market actually drive the price, but we as traders, we can get our clue, right? We can get our clue as to the direction the market is going by just looking at what is happening on the chart. And looking at what's happening on the chart, we try to use the highs and the lows of the market, right? To judge what is happening on the chart. To judge what is happening on the chart. And using the highs and lows of the market, we call it market structure analysis. I don't know. I want to believe most of us, we are familiar with the term market structure analysis, okay? So let me confirm if we are familiar with the term market structure analysis. So please, get to the chat room. Let me know if you know what market structure is. So if you know, you say yes. If you don't know, you say no. Let's do it fast, real quick. So you know what market structure analysis is. If you know, you say yes. If you know, you say no. We have about, I can see the number of participants we have. So please, we're expecting you right now to get to the chat room and of course, respond to this. If you know what market structure analysis is, you just type yes. If you don't know, you type now. I'll be waiting for you, please, at the comment section. So I'm looking at the market. I'm looking at I'm looking at the comment section right now. I think I can see you, Matilda. You say yes. Who else again? I'm waiting for the next person. Let's know how many of us knows what is market section, and of course, so that we can start from there. So guys, Matilda is saying market structure refers to the trend analysis and identification in the market. Okay, that's fine. Now, but when you talk about market structure, you want to include the highs and the lows. So we have a lot of participants here. The rest of us, where are we? What are we doing? Where are we? What are we doing? Is there a way I can call your attention to this? It's like you just left your phone and you're not with us here. Please be with us. So let's get the next person. What is market structure, please? We want to use market structure analysis. Market structure is known as the language of financial markets. We want to use it to know how the market is moving, how the big players are driving the market. Since we are not big players, we want to just follow through the direction they are moving these agro commodities to. And of course, we can stand the chance to make good profit for ourselves. So let's go right now, please. Okay, since we're not getting any response here, we'll just continue, guys. Let's just continue, please. Mm. So, guys, let's continue. I got a little distraction there. Can I say when an uptrend breaks down, vice versa? Okay, okay, that's fine. So, guys, let's just continue with our market structure analysis. So market structure analysis, we try to look at the highs and the lows. If the market breaks a high, then we say the market is now trending upward. If the market breaks a low, we say the market is now trending downward. So this is what I mean. The market creates a high. The next time it goes and trade above this high, that's the sign of momentum. So once you look out for this on the market, it creates what we call directional bias. And of course, looking at what is happening to our coffee here, so the market have done that on coffee already. So coffee is trending upward, as we can see. So therefore, we look out for opportunities to do what? To buy. So look carefully. You notice this is the high, and the market have broken that high. Okay, so immediately the market breaks a high, you start looking out for opportunities to buy. And of course, if you have been buying, so if you have been buying this instrument for a long time now, so you can see how long it has been going up, right? So from the beginning of this year, sir, because this is a weekly chart, from the beginning of this year till now, the instrument coffee has been trending upward, has been trending upward. So that means you can place a trade and go and sleep. You can really place a trade and go and sleep, and of course come back and then you're basking in good profit, guys. Now let's reduce to a much lower time frame. That will be the H4 time frame. So the H4 time frame, the same thing happens here. The market actually created this high, and of course it retraced a little bit lower. And of course, if you see what happened next, to show that this instrument has been trending, the next time this high became our target liquidity, so the market went straight up to that level, traded above it to form a new high. So that means this instrument is still on an upward trend. So it's still on an upward trend. So if you want to trade an instrument, if you want to have a step by step an outline on how you enter a trade, the first thing to do is to have a bias, right? So you create a bias for yourself. By bias, I mean a directional bias. You know, the trading we do is you either buy or sell, right? You either buy or sell, you either buy or sell. So to create a bias means to be on one side. Mm. So what will necessitate your decision on being on one side, right? It depends on what you see on the chart. And you can do nothing against the chart, sir. So the highs and the lows are what we use in our directional bias. So as we're looking at instrument coffee right here, instrument coffee is still on an upward trend. So the next thing to do is to start looking at for your entry, right? Is to start streamlining our entry. So I will use my Fibonacci. I'll draw from this low to this high. After drawing from this low to this high, you can see carefully that instrument coffee has retraced very well to our 50%. No, above 50% is still seen as a premium price, right? So you wait a little bit below 50% for the market to offer to traders for the coffee market to offer to traders a premium price, actually. Sorry, a discounted price. Remember, if you want to buy, you are looking out for a low price. Low price are what I call discounted price. So you wait for the market to retrace a little bit, offer you a discounted price. Discounted price is when the price trade just a little bit lower than your 50% mark. So if you watch carefully, I want So you wait. So we are waiting for the price to fall into this area before we can be able to look at for signals to buy, right? Not signals to sell, signals to buy. So remember, we have already established a bias. What's the bias? The bias is that in recent time, right, the price has traded above the previous high. Price trading above the previous high, we call that a show of momentum. So the market actually show force, right? It's a show of momentum to the upside. So the market have shown us momentum to the upside. So in that case, we are now streamlining our trade direction to only one side, right? To only one side, and that one side is the upside. So, but before we can take a trade to the upside, they want to see that the market has offered us a lower price. Sir, if you walk into any shop or let's say you want to buy an electronics, you'll be looking out for a discount. You'll be looking out for a low price because you want to buy. So in the same way, we have seen reason to buy. You want to buy is a directional bias. You want to buy electronics is directional bias. Now, when you start working from shop A to shop B, you are looking out for discounts. As simple as that. Trading trading is just as simple as our daily life, right? Mm-hmm. So guys, for now, we are doing nothing. We are waiting for the price to fall into this area. Remember, you should not be trading corn with 30,000 naira. So you should not be trading coffee with 30,000 naira. Guys, if you want to trade coffee, you should have minimum 500K in your account, right? Because the per PPI is very, very big, all right? It's very, very big. So when the market moves here, it cannot be compared to what we have on Euro USD and JP USD. So guys, you want to have good funds, right? So I think we have more persons joining us right now, which is very good. So guys, call your friends and family. They need to be in this class. This is life changing. I can tell you there's a lot of wisdom to be released here. All right, guys. So we have done coffee. Let's now jump to cocoa, right? Let's look at cocoa. So just like I said earlier, during the intro, most of the soft commodities, the agro commodities, they are trending to the upside because we have dry season right now, and of course, demand is high for this instrument, and of course, because supply is actually low because of the occasion by the weather. So you can see this instrument is riding to the upside. So, sir, the question is it today that this is started going up? No. That's one good thing with instruments, with agro commodities. When they face one direction, sir, they tend to go in that direction. So this is not kalo. No, no, no. This is live commodities being traded on the international market, right? So the prices we are seeing are the prices that they are being traded in the international market, sir, right? All right. So now the question is it today this is started turning upward? No, sir. Each of these columns you're seeing here, the activity for one day, activity for one day, activity for one day, activity for one day, right? So everything you're seeing here is one day, one day, one day. And for every one of these days, the market has been going up, going up. So let me ask you, do you think it has stopped here? Never. This thing is still going up, sir. It's still going up. It's still going up. But why is this instrument going up? That's the next question we want to ask ourselves. Why is this going up? It's going up because let me show you one website you can use to tell how the big players are positioning themselves across this agro commodity so that you too you can position yourself like that, and of course you can make good profit for yourself. Okay. So one of the websites you can use to know how big players are positioning themselves is actually this particular website we call trading star, right? Trading star. Don't know whether you can see my screen. So I will share my screen again, whether you can see my screen. Quick one, let me share my screen, guys. So guys, please check whether you can see my screen. Can you see my screen? Let me get to the chat room and wait for you there. We have good number of persons here. Okay, so I'll be expecting you to engage me, right? Chat up with me. Let me know if you can see my screen. Let's go now. Can you see my screen? Please check. Matilda is saying no, sir. Guys, I don't know if you can see my screen. Or let me check since you say you cannot see. Okay. So check again if you can see my screen. Can you see my screen? Check again, please. Can you see my screen? Oh, this way, man. So you are with us on this powerful session. Please check if you can see my screen, please. Okay. Wow. I'm only getting response from one person. Thank you very much. So you can see my screen now, right? Okay, that's fine. That's fine. So the website you're looking at right now is actually Trading Star, right? So Trading Star is one of the websites you can use to check if to check how big players are positioning themselves on the agro commodity instrument so that you too you can position yourself like that. So you can check what the commercials are doing and of course the non-commercials. Okay. So the commercials are large speculators, large traders like you and myself that want to just speculate on the price movement and of course take advantage of the movement and of course make profit very fast for themselves and of course close the trade very fast. So those are Those are what we call, excuse me. So those are what we call non-commercials, right? So sorry, commercials are large speculators, right? That want to look at the chart, take advantage of the movement, go in with big volume, and of course make profit for themselves. Whereas this particular category you're seeing here, commercials, are actually those that are actually companies, right? And of course, firms that want to edge their that want to use the particular commodity as an edge for whatever their currency, right? To edge against inflation. So that's what they want to do. So they are not actually there to make profit per se, but these guys wants to make profit. So you focus more on these guys. So as you can see very clearly here, you can see the green is buy, and of course the green is buy, then the red is sell. So you can see the green is far bigger than the buy, right? So we have up to 76%, right? 76% long, just 25% short. So what does it mean? It means that the buys are more than the sell. So these are big players all over the world are positioning themselves, right? So once you get to trading style, let me show you how we can get to that point. So once you get to trading style, it will look something like this. So this is the home page. Just move down to, you look for a soft commodity, and this is the particular one we are looking at. We're looking at cocoa, right? So you just click on this commitment of traders there. You get to see, so you get to see all of this information, right? So let me share my screen again. So from this thing I've showed you now, if you have questions, you can ask me question then before we continue again. But if there's no question, let me share my screen with you again. Now, from that information I've showed you, you can see that is the main reason why this instrument is running to the upside, right? It has been running to the upside, right? So it has been like that for some couple of weeks, or for a couple of months ago. So they have been riding to the upside. So that means as a trader, you already have your directional bias. So that means you should only be buying. Only be buying. So let's zoom in and of course see what the market is doing per candlestick basis. So of course from what we have here, we saw impulse to the upside, retracement to the downside, right? So it gave us relatively equal lows, right, in the direction of the trend, right? So another impulse to the upside to break this high, retracement to the downside, right? As you can see. So another impulse again to take out this high. In fact, it did that again with a gap up, right? With a gap up. So this instrument is trending upward. So if it's trending upward, they want to look at for areas where we can position ourselves for a buy, right? For a buy. So what you want to do is you want to quickly look at this area, right? So this particular candlestick will serve as a bullish order block. I mean, because it is from this particular candlestick the market is going upward. So a replacement to this area I would like to buy. Remember, the market has already done what we call a break of structures. That means it has traded above the recent structure, right? The market has violated the recent structure. The recent structure is the high, the recent high. So the market has violated that structure already. So that means that's the momentum to the upside. We're just looking out for retracement, a little retracement on cocoa, then we should be buying cocoa. Why? We have looked at the fundamentals that the big players are positioning themselves for a buy. Then, of course, we, the small players, in quotes, now, do you know, even if you have up to 2 million naira in your account, you are still you are still a small player, or you are still a small a retail trader. That's the right word, right? Don't mind my words, small and big player. So it's actually a retail trader. So we are still retail trader. So that means our funds cannot really drive the market, cannot really move the market. So wisdom demands that we look at the big boys, look at the big players, how they are positioning. They say, we just did. We just did. So they are actually buying this instrument. So you want to look out for opportunities to buy, right? Opportunity. So we have seen opportunity already. We are just setting our trap, waiting for the market to come to us, right? So two areas where one can buy. So this area will be for a more conservative entry. This other area will be for more aggressive entry, because remember the market gap here, and usually whenever there's a gap, the market comes back to fill up that gap, to fill up the gap, right? to fill up the gap. So remember, what we do is we hunt the market, we don't chase the market. Write it down if you're hearing it for the first time. We traders, we hunt the market. Hunt the market meaning that you set a trap, you wait for the market to come to you. This market is so intelligent that you cannot chase it. And if you chase it, it will hurt you. It will hurt you. So you don't chase it, you hunt it. So the market has broken this level already. And of course, for more aggressive entry, one can enter a buy now. But that is aggressive entry, right? So, right? I don't preach being aggressive. So I wait for a little retracement. Instrument cocoa retrace a little bit to this level. Then I would like to enter a buy a buy trade. So something like this, guys. Something like this, just a little bit, right? It can still even be on this candle. So this area is the first area where one can enter the trade. Then this other area is the second area. Okay, so you can see this area I've pointed out for you. It's actually an area. I call that an area of interest because I'm already getting my bias. I've already gotten my bias. So there is nothing to be afraid of again. So guys, if you have questions, please get to the comment section. Drop your message there on chat there so that I can see you. Matilda, thank you very much. You have been the one sending me a message. Okay. So guys, I think we have analyzed coffee. We have gone cocoa. The next instrument we'll look at is corn. What is corn doing? Wow, this is beautiful. If you check the way big players are pushing themselves also, you also see that they are pushing themselves to the upside, right? Of course, this is dry season. The instrument corn is actually a major product that is being processed into so many other products we have in the market, right? So this instrument, by this time, this dry season, of course, we'll be expecting a high demand for it, and of course, because so therefore it will influence the price, to affect the price. So technical analysis speaking, we are seeing this instrument is rocking to the upside and printing for us the higher high and higher lows. Guys, as a trader, you cannot deny it. This is clearly an upward trend. So when you see an upward trend, clearly your first hurdle has been defined for you. You have gone through the path of directional bias. The market has painted for you directional bias. The only thing you need to do is to start looking out for discounted price. Discounted price. So one thing we can see with this instrument count is that, thank you, I can see that, Matilda. One thing we can see with this instrument count is that for sure it is okay. You said the sound is not clear. Let me check my internet connection there. Okay. So try to confirm again. Is the sound okay now? Check, please. Is the sound okay? Is it okay? Please check. Okay, it's fine now. Okay, fine. So let's continue. So from what we have here on the instrument is trend upward, right? So, but for one thing we can notice here is that this particular instrument is always gapping, right? Instrument cone is always gapping, and guess what? After it gaps, right? The gaps are there, and of course, it fills the gap immediately. So those gaps are actually pressure in that direction. For example, there was a gap here, it came back to fill up the gap. Let me show you. There was a gap here, right? So it gap upward, it came back quickly to fill up that gap. And of course, from there, it used that place as a support, and of course, a discounted price to start going upward. And then we saw another gap here, right? So look up, please. There was another gap here, a very mighty gap. What happened next thing? This instrument con came back immediately to fill up that gap, right? As you can see, it gap upward. Sir Moses, this particular, you said the sound is okay, but you have a bad network. It's already being recorded, okay? And we are recording it. Yeah. So it's being streamed live in our on our YouTube channel, and of course being recorded. So therefore, if you miss it, you can get back to YouTube. Just search Rally Trade on YouTube. You'll be able to see it, okay? So that you can watch and get value for yourself again. Okay, thank you very much for that feedback. So there was a gap upward here, and the market came back quickly to fill it up, right? Take note, take note. Remember, technical analysis, the analysis of the left-hand side. So we're looking at what is happening at the left-hand side, actually, the path. So it gap down here, right? This one is a gap down, but guess what? It filled up immediately and started going upward again. Guess what, sir? In recent time, right? Just some few hours ago, we saw some gap, right? So there is a gap here. There's a gap here. Look carefully. This is a gap, right? Right? And the market is sure going to fill up this one, right? So the market is sure going to fill up this one maybe before coming downward. Why? Because the market have done what we call instrument con have done what we call a break of structure, right? So we'll be expecting a retracement, right? We'll be expecting a retracement. But my own forecast is that this price should be able to fill up this gap before maybe coming down. I'm expecting it to come down. Let me show you this. So there is a movement to the upside here, as you can see. Then from here, the price is coming down, right? So they're coming down, you know. So from here, the price is coming down, guys. I'll be expecting a movement downward, but before that, this gap has to be filled up. Otherwise, it will move down before going up to fill up. So now let's look at a much lower time frame. Remember, if you're just joining us, we have analyzed coffee, we have analyzed cocoa, and this is corn right now. Okay, Matilda, you're asking this gap, is it what we call a fair value gap? No, this gap is different from a fair value gap, okay? So there's a gap that you will see candlestick, there's a gap you will not see any candlestick in between. So the gaps that happen, okay, I will explain after this, okay? I will explain gap. So this particular gap is actually a gap up and a gap down, okay? This particular gap we are looking at. So if you look at this gap, there is no candlestick in between, right? In between the last candle, yeah, and in between the two candles, there is no candlestick. It's just a space, an empty space. So that's the particular gap I'm explaining here. Okay. So this is actually the gap. So from this much lower time frame, I'll be expecting the instrument come to even trade up higher, to even fill up this gap before coming down, right? Now, trading up higher is not one can take that trade, but that trade is actually a high risk trade because the market can fill up that gap immediately or after some time, right? Can fill up the gap immediately or after some time. So this particular instrument can come, should be able to move down this much or even fill up the gap before coming down, before taking out this high, I mean, before trading even much higher to take out this high to form a new high. Now, let me explain gap for you. Thank you for really engaging me on this section, Matilda. Thanks for that. Then, of course, now actually, there are two types of gap. There's a gap you see candlestick in between. There's a gap you not see any candlestick. Now, fair value gap is actually a three candlestick pattern. It's a three candlestick pattern, right? So let me actually look for one to show you so that I don't have to necessarily draw it. Fair value gap here. Oh. Let me show you the kind of gap that's called fair value gap here. Let me use a candlestick pattern to show you. I'm sure you get enough value from it. So this is actually what we call a fair value gap. Oh, that shifted again. So this is actually what we call a fair value gap, right? This particular one. Please, can you see these candlesticks? Indicate, please, if you can see this candlestick. Okay, thank you. Now, 1, 2, 3. The best fair value gap is the type of fair value gap that happens, for example, on an upward trend. Then the candlestick has to be all bullish candlestick. That's usually the best fair value gap, right? So that means we already know this instrument is on an upward trend. Then if you watch carefully, 1, 2, 3, they are all bullish candlestick. Now, fair value gap actually is a 3 candlestick pattern. So it's actually a 3 candlestick pattern, and of course, is actually the gap in between the candlestick 1, right? The high of the candlestick 1, the gap between the high of the candlestick 1 to the low of candlestick 3. I don't know whether you understand me. So this is candlestick 1, this candlestick 2, this candlestick 3. So fair value gap is the high, right? So this is the high, right? The high. So the low. So see what I mean. So let me drop a line there. So I'll drop this line directly on the high of candlestick 1. Then I'll drop this particular one at the low of candlestick 3. Then this gap in between, that is on the candlestick 2 becomes my fair value gap. Let me get to chat room and know whether you understand what I mean. Matilda, are you there? And the rest of us. Please, do you understand it? Okay, so that becomes a fair value gap. So what does it mean? It means it has in it a value that the market will soon come back to hunt, right? To come back to hunt, and especially when it's all on the same candlestick, like the same bullish candlestick or the same bearish candlestick. Okay, sorry about that. Let me try and mute everybody. So, Mr. Francis Ademola, I've been able to mute everybody, so their noise will not disturb the class again. So, usually when we have a fair value gap like that, the market always comes back inside there, right? So, when the market is coming back there again, the market is coming back there to test it now as a support, right? See, the first time he came back here to test as a support, that would have been an opportunity to buy because an upward trend. The second time he came back again to test it, that would have been another opportunity to buy because afterwards it zoom off. So that's what we call fair value gap. So I don't know whether you understand it, so that I can continue. So we have analyzed coffee, we have done the cocoa, we have done corn. We said corn is on. So guys, sorry about that glitch. We are back again. Let me share my screen. We are back again. Sorry about that glitch there. So please, the rest of us, you may want to put off your video. Thank you very much for that, Mr. Princely. Please put off your video. So guys, let's continue. Sorry, I am back. So let me share my screen so that we can continue, okay? Sorry about that glitch. I got some clients trying to call me. So instrument con our analysis here is still bullish. We're only waiting for the market to do what we call a retracement, right? But before that retracement, it will trade into this area again. So let's analyze one more instrument before we draw the cutting, right? So we may just be looking at width, right? Or we look at cutting. So quick one, let's look at this instrument. I think wait will be the last one we analyze before we call it a day. So we have analyzed coffee, we have analyzed cocoa. I want to believe we got some value from it. Then, of course, we have analyzed coffee, we have analyzed cocoa. I want to believe we got some value from it. We have analyzed corn. We have also looked at, okay, we are looking at wheat right now, okay? So just stay tuned, please. Then, so instrument wheat, from what we can see here right now, nosedive for some time, but right now it's trying to move to the upside, right? So we saw a very huge gap here. So everything here is a gap, right? Everything here is a gap. So it's gap upward. And of course, with that pressure started trading upward again. And of course, as we always say, after a gap, the market will want to fill up that gap. So this is exactly what I explained to you earlier. Whenever the market gaps, right? The market tries to fill up that gap, as you can see. It did that up to 50%, right? And 50% is a good one, right? Mm-hmm. it's a good one. So this is about 50% of this box, right? So that's equally a good one. So the market can fill up the gap immediately, or the market can come back much later to fill up the gap, right? So it fill up the gap and of course start going upward. So my analysis here is that this instrument is still trading upward. The reason is this is H4 time frame, as you can see here, and the market is trading above the highs. Okay, so it gave us this high, and of course it retraced to the downside. The next time it pushes up, guys, guess what? It traded above that previous high to form a new high. So this instrument is going upward, guys. So that therefore, for instrument width, I would look at for a directional bias of a buy, right? Directional bias for a buy, directional bias for a buy. And for this instrument, since it's pushing upward, now in recent time we saw a retracement, so another gap to the downside, right? We saw a gap to the downside, but then guess what? The market is trying to fill up that gap. Let's drop down to a 30 minutes time frame. So you can see this instrument is gap downward, right? And the market is almost filling up the gap, okay? So this instrument is on an upward trend. It's right for a buy, right? It's right for a buy, but for a more aggressive entry, you may want to, for a more conservative entry rather, you may want to wait for a retracement down to this level before one can buy, right? Wait for a retracement. So this area will be a good area to buy. So guys, we have analyzed coffee, corn, coffee, cocoa, corn, and wheat. So let me get to the chat room and get your question. Then from there, we can call it a day. Then join us tomorrow again for another exciting session. So we do this particular analysis. We do our money market analysis in the morning. Of course, this particular agro commodity in the afternoon. I promise you, it's always very exciting, guys. So get your friends, get your family members, those that are trading even with other brokers, get them to join us. Then, of course, as they are seeing the value here, guys, before you know, they're already trading with us, okay? Nobody sees value and reject value. So, and of course, those that are not trained, that are your friends also see, get them. Of course, if they want to register, that's fine and good. They can just get across to get our numbers, give our numbers to them. We can get them registered, they fund their account, of course, start trading. Instead of leaving the money in the bank, the money is doing nothing in the bank. It's doing nothing in the bank. You have your friend that you think, they should also learn this thing because they're learning it for free. Okay. Give our number. So let me call my number 09026264507 official line. Guys, I think this is what we'll call it a day. Okay, join us tomorrow again. We have another section by 2 p.m. We also have the morning market analysis by 8 a.m. All the sections are always very exciting, guys. So if there's any question, drop it at the comment section. If there's no question, guys, thank you very much. Bye for now.